Hello everyone, welcome back to another weekly review. So this is week 29 review, and I'm going to go through the trading days. Only Tuesday, Friday, because Monday was a holiday, and so there was no, Monday. I will not be looking at all on Monday. But anyways, let's get into Sunday. So a large wick higher from last month. This is indicating a lot of volatility. I'd be careful about revisiting this wick if price wants to go higher. There is still relatively equal lows on the monthly chart, and so I'm basically acknowledging what I would want to see to continue the momentum higher, and then if we start to go into this wick, I think we could see a move down to these relatively equal lows, because I don't see this as sweet. When I see these big wicks, I kind of ignore it. So we're still moving down here, and we're going to like past 50% into this down close candle. I think it's possible to see a run down to this low. Basically, what I'm highlighting there. So I will be regarding the light blue area as an oversold discount area. So this is basically my discount. If order flow is bullish, price should not be moving through the down close candles to the downside. So preferably, I wouldn't even want price to really get into 50% of this wick beneath it, right, in the discount portion of that wick. And that's because anything underneath, that down close candle is a big discount if price is going to go higher, because that down close candle would become an order block. So as we're beneath it, the algorithm is going to be referring to this as a deep discount and basically something to buy. And so, that's one thing I had in mind. And the S&P and the Dow undoubtedly look stronger. I'm going to retain the idea that tech is in a bear market. This could pull down the realized gains from the S&P and the Dow. So I've been talking about this throughout the year. The Nasdaq is always a leader. If ever you're in doubt and you look at all different markets and you see that they're moving different directions, I would always, 90% of the time, I see that the Nasdaq is the one that takes over eventually, and the other indexes kind of submit to its will, because the Nasdaq has the most volatile sectors, so it moves the most and it has the most money. All the biggest companies are all tech companies, and since Nasdaq is mostly tech, it's what really moves the market. But the Dow is a bit slower, it has 30 stocks, but still, it's going to move a lot more and tends to be the kind of main driver when it comes to the pricing of these indexes. But yes, and it's also clear too that there's still a lot of worries about recession or some sort of crisis, because as you can see, the Dow is very elevated, and the S&P, the Dow even more, which is mostly safer stocks that don't rely on investments and speculation. And that being said, Nasdaq, because it's all tech and it relies a lot on speculation, usually when there's rate cuts coming, the Nasdaq, the tech stocks tend to benefit from that, and we're not seeing that right now. So this is telling me that there is a lot of worried people in the market. So and in fact, actually this week the bond yields did actually close above 0% for the 10-year and the 2-year, but the 3-month and 10-year still have not crossed up above 0%. So the yield curve is still, not indicating a crisis yet, but it's things are speeding up towards it, and I think this is more evidence that we're still in scary times, in our economy. The fact that the Nasdaq is still down, right? So, anyways, dollar is down, likely due to the rate cuts anticipation. I'm still a dollar bull fundamentally, and I've already talked about this because I believe that the dollar is going to remain on top as long as people keep using the dollar. And so if these rates, with these high rates, and depending on how long they kind of stay a bit elevated, this could really help the dollar strengthen. And well, right now though, it's obviously falling. All right, so I wouldn't. I'm not gonna go too much into all the fundamentals, and I have to go into global and macroeconomics, or no, sorry, not global, geopolitics and macroeconomics, but I don't want to do that here. So at the same time, gold continues to show us higher prices. Fundamentally, I am also bullish on gold. Alright, so you know, if anyone wants to know more about this, it's called the milkshake theory by Brent Johnson, and you can just go and look at that. But it's the opposite of Peter Schiff, basically, except Peter Schiff is bullish on gold. So obviously, gold is going to go up because of the fear that I was talking about in the Dow and the Nasdaq. You see in the Dow and the Nasdaq, you see the same thing in gold with the fact that it's just rising. Okay, so the bond market has also remained strong. She seems to be having a little trouble making a new high. I wouldn't be surprised to start to see some retracements if the unemployment rates release positive this week. Alright, so I actually don't know how the bond market closed, and honestly, I should probably remove this because it has nothing to do with the news. So I enjoy looking at the news because it's its own thing, but it's not anything related to what price will do in the short term, right? On the same day, maybe in the long term. But so before we get going, this is the economic calendar. Monday again holiday, and then Tuesday PMI. Red news really every day, but the main attention is for Friday at the non-farm payrolls unemployment rates. And that's like where most of the excitement is that everyone in the market's waiting for. So getting ahead of this, keep that in mind. The best price action will probably be after 8:30, unless price has already done everything it needs to do. So anyways, let's go Tuesday, and big down close day is seen rejecting from the relative equal highs there. So you see those relative equal highs. That's trying to turn on my no. I was trying to turn on my there you go, this thing, and now it's refreshing. So these relative equal highs are kind of building up a lot of liquidity, and we failed to actually get through it. So we've kind of also been edging lower a little bit, and now we're back down, displacing beneath these lows, showing no willingness to actually break any down close candles. Notice that too, how like we have a down close candle, we don't go above its high. We are respecting these down close candles. What the heck? And that it leads to even more, eventually just bam, really lower prices in the beginning of September. So going to that hourly chart, you can see how kind of that fair value gap stays open, and that's like a huge breakaway gap. So as we get down here to sell side liquidity, you don't really want to short because order flow is so obviously bearish. And we could see an even bigger day with how overextended it is and how quick it was to get down here, maybe down to that low, right? And that is a mistake that I made. We'll look at that a little bit closely in my journal. But what I wrote here is, if you look at Asia and then how London moved, it would be poor during New York, when prices dumped. It was becoming more and more evident that this would be the case throughout the day. And these are often, if there's days that I lose, it's always these days. It's always when price is one-sided and I'm trying to reverse it. I'm trying to go against it. Or maybe not one. What I mean by one-sided is it's just going to expand in one direction all day. It's going to keep going up or all session. And then it's displacing in the opposite direction I had a bias in, or I wanted to see a trade in. And I don't feel comfortable getting in to chase this move lower, and so I try and reverse it in long after we hit a sell side liquidity level, not thinking that we could just continue going lower because it provided the already overextended price action. I always think that means that we're in a discount, we're going to go to premium, but no, from the higher time frame, this was a delivery. From the daily chart, this was a delivery lower, to start a bigger move lower, a bigger retracement, or a revisit down to these lows. Right, so keep that in mind. But London didn't have bad price action, and I say that because you see London had that 15-minute bearish fair value gap created during the initial Asia pulse down. London retraced inside Asia, hit the fair value gap. You could use any level here. You could use the order block. You could use anything. But as we move up into that 15-minute gap, you see we had that down close candle in this big fair value gap. We leave an order block, and an order flow clearly changes to bearish. So here there's you don't have to short during London if you're scared that fair value gap is going to support price. You can wait for an inverse. I could see how as we've closed down beneath this whole range here, price consolidated a little bit, and from here it was kind of clear that we would run down to at least the sell side, right? Because that's what London kind of started. So we leave this huge hourly gap which stays mostly open, and even though we're beneath midnight open, it's lower. I don't really like it when I'm shorting beneath midnight open. But there's also a daily fair value gap, the blue line there, that's resisting price, and then you have an order block that one more time resists price. 9:30 pushes it lower. So taking a closer look at London, there's not really anything to look at because it was just kind of like a sharp reversal. There wasn't really the jagged price action I usually look for. You can see it's just kind of one way and then the other way. It doesn't really like initial move lower and then move higher, false move higher and then go lower. But this was the 9:30 opening that pushed price lower, and you can see the hourly city kind of resist price. We had an initial attempt lower here, which is interesting, during 7 o'clock, and then price closed through that, and then it continued to kind of edge higher until 9:30 open. So if you had tried to show, and you'll see this actually occur many times, where we have an initial delivery, maybe we long higher to manipulate, and you're expecting a reversal, but the reversal won't happen until it's time, right? It's that 9:30 open. So that actually Friday, you could see that very clearly Friday, how NFP released. It did a nice manipulation higher, and then it did not go lower until 9:30 open. So anyone trying to trade throughout here, trying to go short, is getting chopped up, and long isn't really that great either because you see it's like back and forth. So then we get this move lower, which displaces beneath all these lows. Now what I don't like about this is I like this as a short, but I saw the 5-minute chart came up and closed above this fair value gap, and I really didn't like that. It was just about to be 9:30 open. So it's still respected inverse fair value gaps up here, like this one there, and this whole order block too. But overall, I don't really like how it closed into here, and this kind of scared me from taking any shorts. I was looking at this short-term high there. You see the X, and I wanted to see price get above it and then quickly reject, but it ended up closing way up here, and I canceled any idea to look for a trade. Then it displaced lower, and then it was an institutional order entry drill, which was right at 9:30. I was less confident taking this, so yeah, I just kind of let it go, and it did go to sell side, and yeah. But now we'll go to the journal. My problem was after this delivery occurred is I tried to long, right, and I was kind of like chasing the idea to long. So go to what I was looking at the beginning of the day. There is a lot of liquidity built up at last week's high. Yesterday was a market holiday, so with how much this day has already moved, I may find it harder to frame quality setups. And here I'm not really, just by looking at daily chart, I'm not really sure whether it will go lower, or I'm just identifying the liquidity up here, right? I'd rather price not trade to 50% of the hourly city. So I'm taking this at 8:56, right around 9 a.m., measuring the hourly city, and I'm saying that I'd rather price not go to 50%, okay, for lower prices. But with a bullish bias in mind, I want to see price eventually cleanly cut through this. So my idea was that this order block would resist price and we would cut through it cleanly. And until we show that we want to close above 50%, I wouldn't be interested in longing. And that's kind of like what I should have waited for. Once that did not happen and we expanded lower, I should have been done. Right? That's it. I was wrong, and I can see how I was wrong with what I wanted to see, and so I won't take anything. Right? And then that would have been a win actually. But instead, I tried to look for something else. Once it actually expanded, forgetting about this idea here, and so Anyways, I said price was overextended, not trading 50% of the hourly gap as indicated above, and expand lower as lower prices displace. Oh, and expanding as lower prices displacing through the low of the day. This was no condition to long. Did I say that right? As indicated above, and expanding as lower prices displacing through the low of the day. I guess it's fine, but yeah, I showed this already. My model was here, but from the higher time frame, this is not looking like something that would turn to bullish order flow. So I'm talking about as we come down here, we hit the sell side liquidity, initial run higher, and we get a run lower, we get another run lower, and then now it's just I see that fair value gap, the balanced price range, and I decided to try it, and it didn't work. So I was kind of disappointed when it didn't work, but I just turned off my charts after that, and I didn't try and keep doing anything else. But it's important that I understand why it didn't work, and it's simply because price was already so overextended. It didn't go higher at all today. So even if price wanted to go higher, even if it should go higher, it didn't. Now this could have been manual intervention, but it's clear with how the previous, beforehand, how the previous day looked, that this would be a poor New York session, with how much the London range expanded lower and the Asia range expanded lower. And so in no circumstance should I have looked for, to return back 9:30 open until it actually shows me it wants to do that. That would have been safer on this day. Alright, now on to Wednesday. Alright, so as you see from the daily chart, we kind of created this daily fair value gap closing lower. This is good for lower prices, and immediately you know that we are now in a deep discount, but that's for higher prices. I didn't want to see being there, so now I'm shifting to being bearish, and I'm identifying this fair value gap. So let's actually go see what I said at the beginning of the day. Price has reached a discount on the daily chart, and I'm ready to continue going lower because we have moved to the previous week low, deeper into the weekly fair value gap. Alright, basically what I just mentioned the previous day or during the weekly analysis, and then this is the weekly chart. As you can see, we're moving past this wick, displacing through it, so I'm anticipating a bigger run down. I took this short. I was on the wrong side of the market today, and this was a good loss, even though I was right in identifying the sell side below, and price did go even lower later. Price had still manipulated lower and completely balanced out that lower price run. After a bit of sideways price action enticing shorts, she runs aggressively higher. Right, so this is what I was seeing, and I'll go through my journal and talk about it, not my journal, the analysis part of my journal, and talk about it the right way, the way I should have seen it. But this is what I was seeing at the time. I saw that short-term high get ran out, and from the 5-minute perspective, with this rejection of the 5-minute short-term high, this does look good. But I have to ask myself, would I be comfortable turtle souping up here? No, not really, because we had this already manipulation down here. If we didn't have this big down close candle lower, which cleared this low and kept these lows intact, this little trend going on intact, so there was still liquidity down here, then yes, I would have been very comfortable shorting a 5-minute short-term high. But see, the news manipulate lower as a Judas swing, and then now we closed above the fair value gap. So this was only a retracement into here because the news had done it so quickly. Price needed to kind of, it served its purpose. It chopped me up. This is exactly, I took this short and then it stopped me out, and this served that. Somebody else was my liquidity and made money based on the losses I took that day. And so that it was its purpose of chopping around a little bit. It ran specifically at 10:30, and I notice that a lot when you have news. Price often decides to run at 10:30 or around that time, a little bit later. But this was a manipulation, okay? And then you find whatever you want to try and get in, but I should not have been thinking that this would be an area to turtle soup and an area to then go lower back down to this low. And then this was a sell side sweep, and then here's from the higher time frame. This is how I should actually look at it, and I'll show that more on the analytical part of my journal, but you see how 10 o'clock news swept this entire morning session liquidity. So why would we need to come back down here from this point down to here? We don't, right? We really don't. It's clear that with this rejection that the price is bullish, and the bodies on the 15-minute chart actually respected the 15-minute fair value gap in blue, while on the 5-minute respected 50% of it. So there's no reason to actually look for shorts. Things are supporting the idea that we're going to go higher. And then at lunch, there was a 15-minute constant encroachment with another delivery higher, which I did take part on, and I think I show that here. But this was been the trade I should have taken in the morning, if any at all. I'm not saying I would have taken this. Honestly, this morning should not have been the trade, because simply this manipulation lower took out all these lows, and then the run higher made a new high of the day. So there would have been, or a new high of the session at least. So there would have been, no liquidity internally. So I'm only looking for external liquidity, and that's more of like a day trade, and less of a scalp, right? So there shouldn't have really been anything to do on that morning. But in lunch, we had pretty good price action. We came down to the short-term low and rejected it rapidly. And when I saw this, I bought this candle as we rejected it, and we started to move above this down close candle acting as support. Pushes price higher. We have an institutional order flow inch drill all the way up, to the buy side liquidity up here. I chose this high. Why? Because it's the first short-term high in this entire price leg. After this one, this is kind of like the breaker. You want to expand past this one, and you want to go to a higher time frame target. So we end up going to the breakaway gap, but I took a partial above this high in case it was just going to continue to chop, and then took my second profit at that just above this high here inside the order block bubble. So that was this trade. It was not bad, and I took this trade on a different account than I took this trade on, because I didn't want to. I had taken 2 losses on this account already, and I didn't want to trade it again. So I took this small trade on my 25K account, which is now out of drawdown. So that's good. Now actually all my accounts are out of drawdown, so this is good. Except for it's like 2 of them at $50 away, but I consider it out of drawdown. And I mentioned here I was patient, and I came back in a better state of mind. And it's important not to beat myself up over the loss this morning. I did it wrong, it will happen. But it's also very important, I should probably add this, that I don't prop myself up for this win, because even though I had that win and I did good, it will destroy me if I let it get to my head. So I can't do that. I need to remain, disciplined and emotionless, in the sense that the way I'm executing my plan every day, right, where I'm doing the same thing. But let's go to Wednesday's price action. So today closed lower, but seeing a little bit of support from the discount fair value gap of the daily range. Okay, after reaching a discount on the daily range, price moved sideways. We wicked down below a short-term low, and price aggressively ran higher. Alright, so this is the 10 o'clock news. Again, from this time frame, do you see anything that signifies lower prices? No, it's a clear rejection higher. Clearly going to go higher, retrace into the daily fair value gap or higher, or not daily fair value gap, but retrace into the previous day's move lower. And after all, yesterday was a big move lower, so it's normal to see a wake up into this candle to try and balance some of it. The body stayed above the bullish fair value gap. This is what I was talking about on the 15-minute chart. No indication of lower prices here. And for reference, where I was trying to short is from this candle's open down to that low. It was around that area after we came out, from this high down to this low, right? But there is no 15-minute PD array, like an order block that forms from this candle. The up close candles are being respected. Price is not closing beneath them. And the fair value gap is being held by the bodies. Right? The bodies tell the story, the wicks do the damage. And the wicks went to liquidity and rejected from it. So there's nothing telling me lower prices. And I see that now, right? But And I talked about everything here. There was no formation of a good breaker, but at lunch we did have a nice delivery with my model. And so we had lunch. To be clear, we had an consolidation. We had a run below that consolidation, and then price quickly ran higher up to the bearish order block on the 15-minute chart, and that was the trade idea. And you see how nicely structured it was. It was pretty good with the down close candles, doing the job they should be doing, which is supporting price, supporting, and up to the breakaway gap where we changed the state of delivery up there. Alright, so now we're on to Thursday. So Thursday, I was talking about this daily fair value gap, which resisted price, and we also have the inverse fair value gap, which is on my chart there. So I'm looking at all these things, and it's very crowded, but you can see clearly the order flow is bearish. This is how the chart closed. So there was a nice delivery to run out previous day high this morning and enter the higher time frame fair value gap. So this is the high of the low of the fair value gap, which is the previous day high. You see how it rejected that. Then more importantly, you see how ahead of that, we had a lot of consolidation in Asia and London, and then we had a clear run lower. So when you're getting up in the morning, you see that we had this run lower down to this liquidity. Even though we didn't clear this liquidity, we left relatively below lows. You see how price, once it starts to go above these down close candles, it's rejected these lows rapidly like this. It's clearly running out some liquidity. So there's the London and Asia high you can look at, and then there's this high up here. I wanted to see London Asia high, and I didn't know for sure if we would enter the fair value gap yet or not, just because of the relatively cool lows. But let's go see what I said. So there is liquidity at the London Asia highs, but with how price is placed beneath the current day low, I'd like to see if 930 will resume a run lower. Otherwise, I'd like to target a premium. Right, so I'm talking about, not this chart. We better look at it in this chart. So London Asia highs, we had the run lower. I want to see if 930 is going to continue running lower, respecting these down close candles, continuously closing lower, staying beneath the midnight open. Or, let's just take about 9 a.m. Or if 930 is going to start to attack higher, then I'd want to see more premium pricing, where the daily fair value gap is the highest level after this buy side liquidity. So talk about this trade a bit, come back to it. But I wasn't really confident here shorting it after I closed my longs. I wasn't really confident, and here you have an entry because when I took this trade, my buy stop was a limit. It was a buy stop. So I bought and then I put a buy stop. So I would have just doubled my position if it went to my stop loss. So as I started to take partials and I was trailing my stop, and I added one, and then it was almost a mistake, but thank God the trade actually worked, so I didn't have to find out what would have happened if I had lost this trade. So anyways, ahead of the large run higher, price made a quick move lower into the pool of sell side, and then 930 delivers price and premium pool liquidity. So we see this move from that high down to that low. It's a clear run higher, down close candle after down close candle, and then price quickly running up to the buy side liquidity. We have initial run to it there, and then a down close candle, and then a manipulation run, which is what I took part in, from this low up to that high. The manipulation that occurred to solidify kind of that high, deliver liquidity, and make price efficient, where there's the most opportunity to get counterparty. And this is what I mean sometimes, when price just kind of reverses on the spot. It's not, I don't really like that because it's just less efficient. So there was a 15-minute gap with a 5-minute short-term high in the morning that ran out price lower. So 15-minute fair value gap, you can see that here. Price consolidates within it a little bit, and then it has a clear run lower where it leaves the fair value gap. The mistake would have been to short it here. Instead, it runs up, clears the short-term high, liquidity has been sort of taken, and then now it turns to actually bearish order flow. You can inverse the gap and just runs it lower down to a certain amount of points, which would have been about 100 points. I mean, that's it's pretty good. Like 100 points for ahead of 930. You don't see that very often. But then 930 pushes price, higher. Um, we have. I wasn't confident, trading it right at 930. But we have this initial 5-minute gap which supports price, and another 5-minute gap which shows more evidence supporting price, running out buy side liquidity. Now, it's clear looking at just from this time frame, we have a 15-minute fair value gap or the daily fair value gap, whichever one you want to use. Short-term high, running out short-term high. I closed my charts as soon as I closed the trade because I didn't want to take anything else. I came back at like 3 o'clock or 5 o'clock, whatever time I came back. So, wait, how did I take this at 5:40? This is the next exact, because I was busy from like 4 to like 1 in the morning, and so I had to review this price chart the next day. But if I had not closed my charts and I stayed on, I think I would have seen this as a clear, market maker sell model. But I was not confident in seeing that lower pricing. As I closed the charts and I was thinking about, okay, what could price do now? As I left it, I was not too sure about seeing a reversal in lower prices today because NFP is the next day. But this is really, really nice as you have the 5-minute short-term high, higher time frame level, and then you could probably go in lower time frame, look for institutional or flow entry drill, but you have it also here. You have more opportunity in the inverse fair value gap for running out the 930 open. And then price just consolidates the rest of the day ahead of NFP. And then NFP resumes this price run lower. But what's important is keep this in mind, keep this price action in mind. And when we go to Friday, you're going to see us as like the exact same thing. It's crazy. But it's the exact same thing. And we'll look at that Friday. But anyways, this is sort of like, you can see why I was less confident actually taking anything back here during the 930 open in more of a discount, because there isn't really a clear move lower where it's obvious that, or not obvious, but it's really inviting short sellers, people that are shorting off impulse, who just want to take the first thing they see. That's not there, but here it is. So here, after we take this buy side liquidity, we leave nice fair value gaps, and then price shows a rejection of this low inside a 5-minute fair value gap. So then I continue to long it. So here, instead of using a 15-minute or higher level, I'm using and then down to a 5-minute short-term low, and then down to a 1-minute entry. I'm using a 5-minute higher time frame, 5-minute or higher time frame level, a 1-minute short-term low, and then a 15-second entry. So this is my 1-minute short-term low, and then that small area there is a 15-second chart. So this is, it didn't get into that gap, and then it left it as a breakaway gap. I entered just above it, and price ran up, closed it a bit early inside that fair value gap, and set it in case it would retrace because it was super overextended. I already had like 60 points. I remember exactly a year ago, I was going for 60 points, and I was getting them for 3 weeks. I was able to get 60 points a week consistently. And I thought that was really good. And it's really like where I wasn't able to hold it, 60 points, like I was going for 60 points a trade, and I wasn't able to be consistent with it. But now, a year later, I'm more able to kind of hold for these 60-point trades. I still, feel more comfortable taking partials throughout this entire thing, before we get to 60 points. If it's going to be a trade that's longer than 5 minutes. I don't know if I'm very comfortable holding, anything past 40 points after 5 minutes, 10 minutes, with that much open profit without taking any partial. So I'm still trying to work on that to hold bigger trades and to see them play out to this high, because I did leave a bit of money on the table, but at the end of the day, it's not what I care about. I just care about, did I make money? And that's the most important thing. Greed is ego is the number one enemy, and ego could have made a big deal about this, the fact that I closed the trade here and it continued to run higher, but not at all once. This is why I closed the chart, because I closed the chart. I didn't have the opportunity to see if price would go up to this high. Well, actually, no, that's not true. I closed the chart after it ran this high, and I did not invite the opportunity for ego to come in and say I could have gotten more. And because I've done this long enough, that I know that I could have gone, probably could have gotten more, but held it, and I was, acknowledging that as I closed the trade. But I was being humble, basically. But that's Thursday. Okay, so now on Friday. So today saw an expansion lower, continuing the bearishness encountered from yesterday, laying a down close candle over the new week opening gap. So previously, this new week opening gap, right, was balanced higher. We closed through it, but we never closed through it to the downside. We closed through it to the upside, but not to the downside. So it's still unbalanced, and now it's balanced, right? So that was something of my interest. If you apply, I'm just mentioning this because it doesn't look like the new week opening gap, but if you press the button set and you use the I forgot exactly what set does. I think it just takes the 16 o'clock close instead of the 1700 close, but whenever the daily settlement is, it will actually show you the new week opening gap in this light. So I'm just using that because it's the lower level. If set was a bit higher, I would just use non-set, but because it's a little lower, I'm focusing on that. So a 4-hour bearish order block resisted price today. You can see how nicely the week kind of played out. Monday, was holiday, nothing. Tuesday just kind of had this weird all day lower price action, and then once we really got into the meat of the week, where people started to put more money into it, when we started to see some employment data that was more important. You see a bit of accumulation on Thursday, manipulation above the accumulation, and then we have an expansion lower, continuing this expansion lower on Friday, retracing at 9:30 or off NFP into the order block and going lower. And what I was looking at on that day was actually at the beginning, I was actually a bit more bullish, and I had it wrong in the very beginning. But you see, I'm taking this at about 9. I had 9:30 open, and I'm saying that I'm open to higher prices. 9:30 could give me a retracement into a bullish fair value gap, and I could try to take it to the previous day high. So I'm talking about this. I'm talking about revisiting the previous day high. This could come back into the 15-minute fair value gap, which isn't drawn properly, and then I could bring price higher from there. But I'm also noticing this. Alright, this is taken at 9 a.m. on that morning, the order block after taking buy side liquidity, and I'm also noticing how the bodies are displacing beneath all these relative equal lows, showing that this could just be a retracement to continue lower prices. And we have this scenario that if we do start to reject, it could be rejecting from this. It could only be going up during NFP as a Judas swing, a manipulation, to run against the daily, my daily bias to go higher than I had. So what I wrote here is, however, this worries me if she were to reject from here, and so I must approach with caution, right? And the short that I took today was from that high down to a level just above the daily fair value gap, just because I wanted to, I knew that I could see a retracement to the fair value gap, and then that's what I was willing to hold for. It did end up going lower, which is good, but I also ran into some more issues, which I'll talk about just after I finish talking about this day. But another order block is created with this move higher into the bigger order block. So as the hourly chart runs up into the 4-hour order block, it does sort of the same thing, right? This creates an up close candle. The 4-hour chart here creates an up close candle to then run the buy side liquidity and a reverse lower. Same thing with this one, up close candle into a PD array, right? Which instead of buy side liquidity is an order block level, and then is ran lower. Alright, and then as we run it lower, that hourly candle, which ran up to the higher time frame order block, this is itself an order block, and price uses it as a resistance in the 10 o'clock hour to drive it lower. So I could have looked for more shorts after I see this order block formed, but I had gotten off the chart after the trade, and I was done for the day. So I did not get to see what else would occur. But watch how nicely the candles respect the order block open level on this time frame. At the same time, price is failing to go higher above the short-term high to the highs on the left. Also similar delivery occurred during NFP release. Price saw a trade down near the older low of the day, but quickly continued higher after failing to clear it. This built up liquidity around all these relative equal lows. Once trading back into this area, price did not reject it, but moved lower with speed and distance. Right, so I'm talking about, up here at the high, a short-term high above it, and then rejection lower, right? And I'm talking about the same thing that occurred during NFP, failing to actually go beneath a similar thing. Instead of actually going beneath a low, it failed to do that and rejected higher quickly. It went beneath some short-term lows, but not the actual long-term low, and then it rejected higher with speed, right? So as we're revisiting this area, this is obvious why there's a lot of liquidity here, because we did not actually clear that space that low. But once we clear it, we were closing way beneath it, which is an indication that we're just going to continue falling the rest of the day. Okay, and now one thing you'll notice, and you compare it to Thursday. If you go back to Thursday, one thing that's different is Friday here has a large move higher during an NFP release, while Tuesday, similar to Tuesday. Yes, I was gonna say that because if you look at Tuesday's down close candle and Friday's down close candle, they're both looking the same. The difference is Friday had a lot more news, and so it actually was more clear when it manipulated that it would reverse and go lower, right? So that's something to note. And another thing too, I'll talk about this a bit later, but remember Thursday when I said that it had looked similar. If you look at Thursday's 5-minute chart at the high here and you compare it to today's 5-minute chart, it looks very similar, and I actually got confused between the two. But here I said watch how nicely the candles respect the order block on this time frame. So again, the body's really nicely stopping at the order block. I love to see that. At the same time, price is failing to go above the short-term high. Oh, I already mentioned that. Okay, so let's take a closer look at the NFP release that pushed price higher to the high of the day. Price encountered a 5-minute fair value gap that acted as an institutional order flow entry drill. So, that 5-minute blue area there pushed price higher. This was right after 8:30 news release created a 5-minute fair value gap. We had not yet gotten to a point I was comfortable with in liquidity, and we had not really manipulated and made the high of the day yet, so we continued to look for that. And then there was a 1-minute short-term low, which then you go down to the entry time frame 15 second, and you get an institutional order flow entry drill. Now I did long this on a top step challenge. I longed from down here, and I'm going to talk about that in the back of the journal. But 5-minute chart to study delivery lower. The X level was a 15-minute short-term high stop run. This led to a change in order flow with a 5-minute fair value gap created and used send price lower. There are many different spots here that can be used to break apart and find entry. So you see how discretionary my model is. I can use a 5-minute PD array to a 1-minute short-term low and a 15-second entry. I can use a 15-minute PD array to 5-minute short-term low to 1-minute entry. I can also use an hourly or 4-hour PD array to a 15-minute short-term high or low, and then a 1-minute or 5-minute entry. Right. So what happened here. We had the hourly 4-hour order block, 15-minute short-term high. If you go to this time frame, where's the 15-minute chart? There you go. 15-minute short-term high, which gets ran out after having initial fake lower, and then quick expansion lower. 5-minute institutional order flow entry drill after showing evidence of clear displacement. This isn't the best because we didn't really have a fake displacement lower initially, but you look at this area, every time we kind of get an X, it's like an opportunity to look for shorts. So you get more and more here, and then this is down here is a more important one, where you have the hourly order block and the blue line there, right across the screen at around 18,800 to 17,780. But you have this immediate rebalance and trade back to the order block. As you trade up into this fair value gap, you trade one more time above the short-term high, and then you reject rapidly this entire move from this low up to that high, then resists price and continues to push it lower, for an even cleaner delivery lower. So I was not on the chart at that time. I got the chart like at 9:45 after this trade kind of hit and it started to retrace. This was a really nice second stage delivery though. That unfortunately I was not unfortunately, but I was not there to look at. There's always the charts for the next day. Anyways, I want to talk about this day. It's important because there was really nice price action throughout the entire day, and I did participate in multiple different trades. But this morning I took this trade on Top Step. On my Apex I only took this trade, but it won, and I closed it early with $120 missing from passing. I couldn't stop myself from trying to just get 10 points to pass. I was trading inside the consolidation. I was actually trading micros, so it would have been 10 points would have passed me, or 5 micros. I was trading inside the consolidation instead of waiting for the right time for price to move. I mentioned earlier in the video where there was a morning where price had manipulated higher during the 8:30 and then until 9:30, from like 8:50 to like 9:30, price just kind of moved sideways, and it waited and chopped around until the 9:30 open was ready to deliver lower. So I actually got stuck in this entire chop. After I got this trade, I longed down here at this exact low, and I closed it right up here. I wanted to run out that high, but I closed it a little early because I was so close. And when I trade, I don't look on the challenges on Top Step. I don't look at the P&L or the account balance. I just knew that I would be somewhere near passing the account, and I closed it here. And then I saw it was $120 away, and I'm like, oh my god, it's 10 more points. I could have just held this. But once we got above that high, I immediately didn't think that it could just consolidate and chop around until 9:30. I just continued trying to chase it because I was also planning on trading my Apex account, and I didn't want to do both. So I ended up blowing all the profit from this trade throughout this entire consolidation, and then it got back down to break even for the day. Then I stopped till 9:30, and then I took this exact trade on Top Step, except that I entered a bit lower here. Here. I entered right ahead 9:30 open right here, and then 9:30 open candle ran up. I had a better entry on Apex because I was more patient with that one, but Top Step I just wanted to enter and just then focus on entering on Apex, not doing both at the same time, because I wasn't planning on doing both at the same time. And then it ended up actually stopping me out. It was like right around here, the daily fair value gap low, or no, this is a 15-minute fair value gap low, and it ended up actually taking me out of the trade and like blocking the trading because I have it set to $400 risk setting. If I lose $400, the Top Step won't let me trade. It's like the daily max drawdown that I have manually set. So price continues to run lower, and then it comes back to break even, just beneath break even, stops me out making my commission, and then I re-enter right at the order block there when I see it reject and it move back into the order block. I re-enter on the 15-second chart to then bring it down to that 1 minute fair value gap. Initially I was actually willing to hold past the 1 minute fair value gap. I was supposed to take partials at the 1 minute fair value gap and then the rest off here or lower if I want to keep going lower through the 15-minute fair value gap. It's probably going to take the partial at that low there, but at least midnight open too is something I wanted to reach, but it did not get there, and then it kind of freaked me out a little bit because my account was out of break even in profit here and up like almost $200 net profit, and I was like, oh okay, this is good, and it kind of like was a bit of a roller coaster, but I was like, no, this trade is still good. I got worried and put my stop to break even. It's fine, and then I re-entered assuming a different set of risk where I put my stop loss to this high, and then I still managed to get enough points to get my account out of break even. So this is the second trade I took on Apex. I managed it well, and now my accounts are out of drawdown. Part of me wanted to hold longer. Part of me wanted to keep looking for another trade. But I also have to ask myself if I just think that I'm that guy, or if I'm gunning to lose my head. And this is exactly what happened on Top Step. I must go steady and sit on the wind for a while. Win for a while. We are going into the weekend, so there's no better time to be content with my trading than now. So the what I didn't do on Top Step is I thought I was like a hot shot and I could go with a 15-second chart and just find something, and unfortunately it was not going well. It was a bunch of small losses, like $80, $50, and then some 120, 140, and it was no over leveraging. In fact, some of the trades were deleveraged, but it was just like 12 trades that I took throughout this entire price action, just trying to get 10 points, and then 10 points became 20 points. And sometimes I'd have up to 20 points, but then I'd continue holding it because I was in a bit more drawdown and I wanted to get back the equity high. And I was just thinking, like, what if I just stop here? Like, I still am in profit for the day. What if I just stop here? But I wanted to pass this account so bad this week, and I didn't. I lost track of the plot for the Top Step account.